Welcome to Tesla Daily News Podcast. It's Wednesday, December 24th, 2025. Today, we're talking autonomy regulation risk in China, fresh questions about Tesla's Robotaxi reality in Austin, rising pressure in Europe, and a safety storyline around Tesla's electronic door releases. Plus, what the broader market mood could mean for Tesla into year-end. Story 1. China just threw cold water on the hands-off, eyes-off autonomy timeline, and that matters for Tesla's biggest production base. Context: China is not only the world's largest EV market, it's also one of Tesla's most important regions for volume and for cost-efficient manufacturing out of Shanghai. Details: regulators in China are reportedly delaying plans for mass production of self-driving cars after an accident, signaling a more cautious stance just as local automakers had been talking up near-term commercialization. Impact: for Tesla investors, the risk here is not just slower regulatory approval for full autonomy features, but also a tougher sales environment if self-driving becomes politically sensitive. That can cap software attach rates and delay the kind of high-margin autonomy revenue bulls often priced into Tesla. Takeaway: watch for any knock-on effects in China, changes to allow driver assist marketing language, tighter testing rules, or insurance requirements. Even if Tesla's approach differs from domestic players, a cautious regulator usually slows everyone. Story 2. Tesla's Austin Robotaxi program looks smaller than the hype, and that's a near-term sentiment catalyst. Hook. A report claims Tesla's supervised Robotaxi activity in Austin may involve only about 5 vehicles operating at the same time. Context: Tesla's valuation debate is increasingly about autonomy and future services revenue, not just vehicle deliveries. So scale, even in a pilot, matters to credibility. Details: Electrek reports an engineering student reverse-engineered Tesla's Robotaxi app and collected data suggesting the active fleet is limited, potentially far below the public impression created by Elon Musk's commentary. Impact: if investors conclude the Robotaxi rollout is still very early and tightly constrained, that can pressure the autonomy narrative and push analysts to be more conservative on timeline assumptions. On the flip side, a tiny fleet can also mean Tesla is being cautious and methodical, which could reduce operational risk, but it's not the at-scale signal the market wants. Takeaway: the key question is not whether a pilot exists, it's whether Tesla can expand it quickly while maintaining safety, uptime, and a clear regulatory path. Any evidence of rapid scaling, broader geofencing, or rising trip volume could swing sentiment back. Story 3. Waymo's blackout fiasco gave autonomy investors a real-world stress test, and Tesla is trying to make it a competitive talking point. Hook. During a major San Francisco power outage, Waymo Robotaxi stalled and blocked traffic, and California regulators are now reviewing the incident. Context: autonomy competition is as much about edge cases as it is about sunny day demos. Reliability under infrastructure failures is a big deal for regulators and for public trust. Details: multiple outlets report parts of Waymo's fleet became paralyzed at intersections during the outage, prompting a temporary service pause and subsequent restart. The California Public Utilities Commission is looking into it. Impact: this story is indirectly stock relevant for Tesla because it shapes the narrative around who is closer to dependable autonomy. If regulators tighten expectations for how robotaxis behave during outages, communications failures, or traffic signal disruptions, it raises the bar for everyone, including Tesla. Takeaway: investors should watch for regulatory spillover, new operational requirements, mandated fail-safe behaviors, or reporting obligations for robotaxi operators. Higher compliance costs and slower approvals can impact autonomy business models across the board. Story 4. Tesla is under more pressure in Europe, and that's where competition hits margins. Hook. European coverage says Tesla is losing its old dominance as competition expands. Context: Europe has become a battlefield of aggressive pricing, fast model cycle updates from legacy automakers, and increasingly credible Chinese entrants. For Tesla, Europe is important for volume, for Berlin factory utilization, and for brand positioning. Details: a European auto market report notes the EU market is up about 1.4% through November, but Tesla-specific commentary highlights intensifying competition and reduced two-model dominance compared with earlier years. Impact: the risk is margin compression if Tesla has to discount more to defend share, especially with multiple competitors targeting the Model 3 and Model Y segments. Weak demand or higher incentives can also impact Berlin's fixed cost absorption. Takeaway: track European registration trends, Tesla pricing moves, and any signals about Berlin output changes. If Europe becomes a lower margin region, investors will want to see offsetting strength in energy storage or software. Story 5. A Bloomberg-linked report alleges Tesla doors failing to open after crashes have been tied to 15 deaths, a headline with regulatory downside. Hook. Safety headlines can move Tesla quickly because they create investigation and recall risk even before any formal action. Context. Tesla's design choices, including electronic door releases and flush handles, are part of the brand, but they also create a safety narrative if failure modes become high profile. Details. Coverage circulating via multiple outlets cites an investigation claiming at least 15 people died in crashes where Tesla doors wouldn't open and notes the lack of comprehensive public statistics on trapped occupant incidents. Impact. If this drives NHTSA scrutiny or new safety standards around mechanical overrides and post-crash egress, Tesla could face retrofit costs, recalls, or design changes, all of which can hit margins and create negative headlines. Takeaway. Investors should watch for official regulator statements, defect investigations, or updated guidance from Tesla. The market typically reprices on confirmation, a formal probe, a recall scope, and the estimated cost per vehicle. Story 6. The macro backdrop is risk on into the holidays, and that can lift high beta names like Tesla, but it's fragile. Hook. Global equities are rallying again on renewed hopes for interest rate cuts. Context. Tesla trades with a growth multiple mindset. When markets price in easier policy and lower discount rates, high-duration stocks can benefit. Details. Reports across markets coverage highlight continued gains in equities, with optimism around additional U.S. rate cuts and a positive year-end tone. Impact. A supportive tape can keep Tesla buoyant even when company-specific news is mixed. But it also means Tesla can be vulnerable to any sudden shift in rates, inflation data, or risk appetite. Takeaway. If you're trading Tesla into year-end, keep one eye on Treasury yields and Fed expectations alongside Tesla-specific catalysts like deliveries, pricing, and autonomy updates. Let's wrap it up. Today's big themes. Autonomy is facing tighter scrutiny, especially in China and via real-world robotaxi stress tests. Europe is getting more competitive, and a safety narrative around door egress could attract regulators. Into tomorrow, watch for any official follow-ups from regulators on autonomy and safety, plus any fresh Tesla pricing or registration signals in Europe. If you're getting value from Tesla Daily News Podcast, subscribe and follow for your daily, investor-focused Tesla Roundup.